Welcome. We will begin shortly. The first step to buying a house is finding the right program that will fit your needs. I created this webinar to complement my yearly Finance the Dream ebook, which is published at the end of October. Use this webinar as a resource for your DC real estate purchase. If you need further assistance, don't hesitate to contact me. Let's get started. Today's agenda, I'll discuss a little bit about me, different components of a mortgage, how to qualify, the programs available in DC, relocation plans, and information on agents. So, my name is ReshawnLeaven. I'm a realtor with Keller Williams Realty, and I'm licensed in Virginia, Maryland, and DC. I have been in real estate for over 15 years assisting buyers and sellers in the Washington metro area. If you also need a notary, I can help you after banking hours. Let's begin. To understand about mortgages, first let's talk about what's included in a mortgage payment and work backwards. So if you decide to move forward with buying a home, your new mortgage will have several items. The basics of all mortgages is PITI. The P is for principal, the I is for interest, the T is for taxes, and the last I is for insurance. Depending on your loan program, you may also have what's called PMI, which is private mortgage insurance. PMI is the insurance that protects your lender in the event that you default on your loan. FHA, conventional, and rural housing all have PMI. I'll discuss the different types of mortgages later. The monthly payment will also take into account any association dues that you're paying with your home, HOA or condo. So it's important that you know what your total monthly amount that they give you is. So all things together are going to be what's called your total housing ratio. Be leery of online calculators as they may only calculate just the principal and interest. They may not calculate taxes, they may not calculate insurance. So you see a lower amount of a high sales price, I would be cautious of that. So if your lender states that you approve for a mortgage of $300,000, make sure you ask the following questions. What's the payment amount that you cannot exceed, and what is the interest rate based on that payment that they gave you? If the rate increases, your maximum monthly payment will decrease. So it's important to know what the interest rate is that they're quoting you, and you won't be able to have the rate that they gave you unless you have a house and you basically lock your rate, unless the program allows you to lock your rate ahead of time, but ask them that first. So if the monthly payment amount that they gave you is $2,500 a month, you cannot go over it by $1 because that's your maximum payment threshold. The maximum payment will include PITI, PMI, any HOA or condo dues. So mortgages, let's talk about mortgage types. So there are four basic types of mortgages. You have conventional, you have FHA, you have VA, you have rural housing. Though in DC you do not have rural housing, this is just for educational purposes so you understand what they are. So getting started. What you need to get pre-approved. Make sure that you get pre-approved instead of pre-qualified. It will save you time and be less a stressful process. To be approved, you want to submit your documents to your loan officer and make sure your file goes to preliminary underwriting before looking at homes. When it comes to your documents, think of everything in twos. 2 years of residence, 2 years of employment, 2 years of bank statements, 2 months of proof of income, that's your pay stubs, 2 years of tax returns. You're going to also need to give them authorization to pull your credit report and any additional information that your lender requires. You need to give that to them. If you are self-employed or have business income as well as W-2 income, you'll need additional information as well. So to qualify for the programs in this webinar, you will need a credit score between 620 to 80. Some programs have income restrictions based on the program and your household size. Some are have a first-time home buyer requirement. If to be considered a first-time home buyer, you cannot have owned any real estate in the past 3 years. And you may also have to do home buyer education, which can be done in class or online. Not all programs have limitations or the same limitations. So, programs by state, or which in this case, DC. So, DC Open Doors is one program, and they have two programs underneath them. So, the first is the FHA Plus program. So, with this program, you can get up to $16,950 for down payment, but you have to get an FHA loan. And the second program they have is their conventional product, which is the HFA Advantage program, which is $14,350 for down payment. The next is HPAP. You can get up to $80,000 for down payment. You heard me, $80,000. Though that this program has income limitations and there's different levels of the amount that you can actually get. So the lower your income, the more you'll be able to get. And the last program is the EAHP, which that's $20,000 for down payment for DC government employees. So there are also other programs available from local lenders that offer 100% financing, which Navy Federal's one, Tower Credit. There's a lot of different programs out there. And a lot of local lenders have grant programs as well as down payment programs as well. So, programs by profession. There are additional programs for certain professions. If you're a teacher, police officer, firefighter, EMT, if you're a doctor, if you're a veterinarian, if you're a pharmacist, if you're a veteran, a nurse, if you're self-employed, and other professions. For more information about your profession, give me a call 240-284-4114 and we can discuss your options. So, how much money do you need to purchase a house? Well, it depends. It depends on the market. In DC, you may need a little bit more, but just on average. So, initial funds, when you start looking for a house, initial funds, I would say this you may need more than this, but this is just a kind of a rough estimate. So let's say the house was $300,000. So you'll need 1% of the sales price, which would be $3,000. You'll need money for inspections, so that's $500. You need money for your appraisal. The appraisal won't be ordered unless you pay for it. That's $500. So the initial amount that you're going to need is $4,000 once you write the contract. That's the basic amount you'll need. So when should you start the process? So if you're on the month-to-month lease, I would say a minimum of 60 days before the lease ends, if not sooner. If you're in a yearly lease, you need to do it 90 days before the lease ends. And this timeline is based on you being active in the market. That's what I mean. You can get your approval. Approvals usually last only 90 days and you'll have to get them updated. So, home buying timeline. So first you got to get your pre-approval, then you find your house, you go under contract, you get your inspections, your appraisal, your file goes through underwriting with the lender, and then you get your closing disclosure. So from start to finish, the entire process can be done in less than 21 days up to 60 days, though the timeline is going to depend on several factors based on the loan program you choose, availability of housing, where you want to purchase and where you can afford, and the lender that you chose. Are they a fast lender? Are they slow? What's going on with them? Is it funding available for the program that you actually want to get? So there's a lot of different variables that come into play. So remember, the final thing I said is the closing disclosure on this slide. You have to receive your final closing disclosure from your lender 3 days before you can close, or you won't be able to close. If you're closing on Friday, you have to have the disclosure on Tuesday. If you don't have it on Tuesday, you're not closing on Friday. So remember that. And remember that you can't close on a house on a Saturday, Sunday, or holidays. So when will your first mortgage payment be due after you buy a house? So your first payment will be due based on when you close on your home. If you close at the beginning of the month, before the 6th of the month, it will be the immediate next month, meaning if you close between June 1st to the 5th, then the payment will be July 1st. If you close between the 6th of the month and the end of the month, then it will be August 1st. And for more information about this, let me know. So let's talk about agency. This is important for you to understand. So who represents who? So the agent and agency with the sign in the yard are the listing agent and listing broker. They represent the homeowner who is selling the house. In Virginia and DC, a listing agent is allowed to represent both buyer and seller if both parties agree, though no advice or guidance can be given during the transaction by either party. And in this scenario, it would be a dual agency situation when the same agent represents both buyer and seller. It's best to hire a buyer's agent, though, because you need somebody that's going to work for you, that has your best interests at heart. The listing agent is going to get paid regardless of whether you use them or not. They're going to get paid. So you need to have somebody that basically has your back, that's working for you in a sense. Well, really, that's what it is. A buyer's agent will assist with all your negotiations, scheduling of appointments, handling contracts, and other questions. Getting you utility information. They handle all of these things needed throughout the sale. So designated agency could occur if you decide to purchase a home listed by the same broker that your agent is affiliated with. The same broker employs both agents in a transaction, but each agent works independently with the client that hired them. So in order for you to have a buyer's agent, you have to sign a buyer agency agreement. Keep in mind that all agreements can be terminated. Make sure you read the terms of your agreement regarding the termination policies. This statement is for educational purposes only and is not to sway you from your current affiliation if you already have hired an agent. Though if you're unhappy with an agent, you can, in a sense, fire them or break your agreement. But read on how that should be done. Buyer's agents are paid by the seller or new home builder, so that's good for you. No money out of your pocket for that. Though the fee that the agent earns is determined by the amount or percentage in the agreement. So if the agreement is more than the total commission being offered to the agent, you would be responsible for paying the difference as a part of your closing costs. For example, say in your agreement it states 3.5% of the sales price is compensation to your agent, and the compensation being offered is 2.5%. You would be responsible for the difference, which in this case would be 1%. So make sure you understand that when you're hiring an agent and what you'll be responsible for. Thank you so much for watching Buying a Home in DC. If you have any additional questions, feel free to give me a call at 240-284-4114 or send me an email. Make sure you subscribe to my channel, comment, and give this video a thumbs up. I'm Realtor Leaven with Keller Williams. Thanks for watching.